À, vậy nè.
爸爸给。
嗯，爸爸来工作，南香港县。 Okay, guys. We start to do some London break London break strategy tonight. Actually, I'm gonna select like 4 pairs today. So the one I'm gonna select is let's say pound New Zealand and like say pound. I don't want to do pound cat. I think a pound New Zealand. I think a pound Aussie, Euro Aussie, Euro cat, and Euro Aussie. Probably I'm gonna do the Euro Aussie. So I think I'm probably gonna do the Euro and pound against Kiwi and Aussie tonight. Okay, so those 4 pairs, I'm going to set it up now because the 3 a.m. candle is still, I'm still waiting for 3 a.m. candle to be finished. So it's a 3:01. It's a 3:01 a.m. Eastern time, and it's equivalent to 7:01 p.m. in Auckland time. So I just bring up this time, equivalent time, so you guys can see like what time frame you were in. So if they, for example, if you were in China, it's only 3 p.m. in the afternoon, 27 August. And if you're in New Zealand, and like where I am, it's a 7:02 p.m. at 27 August. And if you're in the American Eastern Time, it's a 3 a.m. it's actually midnight in 27 August. And if you are in Moscow, you'll be 10:02 a.m. in the morning in 27 August. Okay, so I'm going to wait for the 3 a.m. candle Eastern Time to be finished, so we can do it. We can do the setup together. The reason why I want to 3 a.m. candle is like you see here. It's an Eastern Time here, and Eastern Time 3 a.m. to 4 a.m. That's a crossover between the London session and the Tokyo session. Okay, so if the two sessions crossed over, then like usually the market is very volatile. Like see, this is a Tokyo session and London session crossover, and you can see London session and the New York session crossover. It's about like 8 a.m. in the morning in American time, Eastern time. So we're gonna set it up, and I think probably we have to wait for about a couple of hours, see if the position, if the direction is going to our flavor. So I'm going to, actually, it's too many. I'm going to bring up this Excel spreadsheet. So I'm going to select 4 pairs. I'm going to, like say, I will say here, so pound New Zealand, pound Kiwi, and Euro New Zealand, and Euro Aussie, and pound Kiwi. Okay, so we're gonna do the 4 pairs today. So what I'm gonna do is set up 3, well actually two lines. So 3 a.m. candle is going to be finished in next 6 minutes. So we're gonna take high of the candle, and the low of the candle. So we can input some figures in those columns, cells, and then we can determine like what's our setup entry. So we're gonna do like the OCO, one cancel another. So if we're gonna, so basically it's just like two entry, and if one of them is being triggered, then the other will be automatically cancelled. So okay, I'm going to set up, just to prepare for the setup. And as you can see, I'm going to move some lines over, Okay. Right. Line. Keep, and then I anticipate like this trend is going to be follow through. It's a bullish trend, and the same as Euro Aussie, as you can see. And I'm going to, so someone just asking like what's those lines for? The lines actually for my reference, so which you can see. The green line, there will be buy stop line, and the red line, horizontal line, it would be my sell stop line entry. Okay. I'm going to do the Aussie pound Aussie as well. Okay. Some lines, bring some lines, move. Oops. Okay, and then do right, and we're gonna make one of them is become red. Okay, so we're gonna wait another 3 minutes, to start over. Okay, prepare the red line. So basically, if you can see, the green would be our buy stop entry, and if you can see, the red would be our sell stop entry. So we only do the stop entry, not the limit order. We only do the stop order for our London breakout strategy. So this is called our London breakout strategy. So we, depending on like how 3 a.m. is closed. So if the 3 a.m. closed is quite bullish, and we anticipate the price is going to be very bullish, and we're gonna take advantage of this bullish trend, and we can make some pips. Okay. Right. I'm going to. Okay, just for you guys reference. So I'm going to put this like aside so I can see another screen in front of me. Okay, and we're gonna do this together. I just put this screen for you guys to see. We'll be able to see like which entry is going to be. Okay. Right. And the risk. Okay, so it would be DDD 5. Okay, 5 under the low, and sorry, 5 pips under the low, and then 1 pips under the high. Right. Okay, another maybe a few seconds. Wait for 3 a.m. to be established. Okay, let's see. It's 3:09 a.m. Okay, 3:09 a.m. So 3 a.m. candle is going to be finished in next 10 minutes. Sorry, in next 10 seconds maybe. As you can see, this is 10 minute chart. Okay, so basically it tells us it is a really quick trade. So it's not like long term. It's not like a medium term. It's very short term. We are just only focused on short term. Okay, so the candle has been finished. Okay, we're gonna type it in. Okay, so this is a pound New Zealand, and then the high will be 1.92230, and the low would be 1.9186. Right? Again, 10 pips about high. There will be this. Okay, so there will be 1.9233, and 5 pips low will be 1.9181. Okay, so risk stop loss. Okay, we're gonna do the two orders. Okay, so those two. Okay, so we're gonna bring the loss, bring the risk. Okay, so this is our risk. Alright, so the risk is 52 pips and our profit needs to be 1.5 times of our risk. So there will be 78 pips. Okay, so we're going to set it up there. So trading, OCO, let's say OCO, right? And then we're going to do the pound Kiwi. Let's check the pound Kiwi. Which one is it? Pound Kiwi. Yep. Okay. One lot. And buy stop entry and sell stop entry. Right? Okay. So buy stop. Okay. The buy stop. Where's the buy stop? Okay. There will be 1.9233 and effectively there will be, if the buy stop entry, there will be our sell stop entries stop loss. So 1.9233. And the sell stop entry, there will be 1.9181. And simultaneously, there will be our buy stops stop loss. So 1.8181. Okay, so the take profit, and we're gonna calculate it. And 78 pips plus the 10 pips high. Okay, there will be 1.9311. Okay, 1.9311, and 78 pips below the high, below the low, there will be 1.9103. Okay, so this one will be done, so we can click OK. Okay, so we're gonna wait market for trigger. So this one has been done, and we're gonna jump to Euro New Zealand. Okay, Euro New Zealand, and we're gonna see the candle. Okay, Euro New Zealand candle, there will be 1.74592. Low, there will be 1.74465. 10 pips above high, 1.74692. 5 pips below the low, 1.74415. Okay, so the risk, there will be the those two figures. Price, okay, minus this, minus this. Okay, so 27 pips. Okay, that will be the stop loss, and 41 pips, that's our potential profit margin. Okay, so we're gonna set it up again. Do trading, OCO, and we're gonna find Euro New Zealand, where the Euro New Zealand, here. So one lot, and buy stop and sell stop. Because today is actually the second or third session, so I'm not gonna sell. I'm not gonna do the because I don't have time for do the money management. But next session I will. So it's really time consuming to do the market to do the money management. So that's fine. We're gonna take like one lot, so not too many. Okay, so buy stop will be 1.7469, and that's will be 1.7469, and sell stop that will be 1.74415 and 1.74415, and then the take profit there will be high, there will be above the high plus the one minus. Okay, so they will take profit 1.75107, and the stop loss would be, sorry, take profit with 1.7399. Okay, so this time it's been set up. You see. Okay, so we're gonna move to the next one. It will be Euro Aussie. Again, we're gonna do the normal thing. 1.6455. The high 1.6444. It will be low, and 10 pips high. It will be 1.6465. The low, the 5 pips low will be 1.6439. Yep, correct. Okay, so let's do the calculation. Minus this one. So 26 pips stop risk, and 39 will be our take profit. And then this one minus plus, right? And then this one minus. Okay. Okay, so do the trading, simple CO, and we're gonna find Euro Aussie here in one lot, and buy stop and sell stop. So we're gonna collect those. So buy stop, there will be 1.6465 simultaneously, 1.6465, and sell stop entry with 1.6439, and stop loss will be 1.6439, and then the take profit 1.6504, and this will be 1.64. Okay, so it's done. And then the last one, there will be the pound Aussie, pound Aussie. Again, here, pound Aussie. So this pound Aussie, not pound New Zealand. High, there will be 1.8, 1183, 1.8116, 1.8088, and 10 pips above high, 1.8126, sorry. Low 1.8038, and the stop loss. Okay, so the risk. Okay, the risk, this minus this risk. Okay, this is quite high. So 88, that will be the risk, and 132, that will be the profit. Okay, so this minus take profit would be plus 32 pips. This equals this minus 132 pips. Okay, right, so we're gonna do the trading again, and we're gonna find pound Aussie. Okay, pound Aussie. Right. Okay, so it'll be 1.8126, 1.8126, sell stop, 1.8038, and this one will be 1.8038, and the limit will be 1.8258, and this one 1.7906. Oh, oops, something wrong. Let me just check. Okay, so the sell stop, yep. I see. Okay, so it will be, that must be wrong. Plus. Okay, one. Why is not working? Why is not working? That rate. Is there something wrong with it? Oh yes. Okay, let me just check out for something. No, right, and then pepside 1.8126 Oh, I see. Okay. Sorry, guys. So this value is invalid. So 5 pips low, they're 1.8083. Okay. So okay, so we have to change. Oops again. Okay, so value will be 1.8190 and 1.8018. I think that should be right. Oops. So what's wrong with that? 5x low. Oh no. Okay. I think this is that it's already been triggered, or why is it invalid rate? Invalid rate 1.1, 1.3, 1.03, 1. Okay, I think that's what happened. So it's been triggered. There should have been, would have been triggered. So you can see the price here is 1.813, but my stop entry 1.8126. It's already been triggered. So okay, so we're gonna do the market order here instead of we're gonna do the market order. Okay, so bring up to the pound Aussie 1, and then we're going to do the setup 1.8083, and our take profit will be 1.8190. Okay, so I think is that being okay? It's all being triggered. See, it's all being triggered. It's all being triggered. So we're gonna wait for the market to take us to our take profit, and I'm gonna set up some maybe 20. Okay, maybe we just probably just wait for the market, and maybe just 20 minutes past. I'm gonna. Okay, it's already been. It's been 7. Okay, 7:24, so nearly nearly 7:30 in Auckland time, nearly 3 a.m. in Eastern time. Right. Okay, so I think in the meantime, wait for the market, because the market's been triggered, and we're gonna wait for the transaction, or wait for the position to be to let them go, and then so stop loss already been set, and take profit is already been set. So once the market price goes to, like say, in the middle, I'm going to move my stop loss maybe 10 pips. Let's see what's our risk. So about like 26 risk. So I'm going to move the stop loss maybe close to the entry, or even on entry will be the break even, right? Okay. Okay, so let's see if I can. I'm going to show you do some preparation. Okay. Let's do here. Right. Okay. So I'm going to introduce you guys because you guys have already watched me to do some like kind of a calculation and do some setup. So you guys might want like what I'm doing. So this is actually what's called a forex exchange. We as a traders call it like spot market or cash market. There's like about 4,500 world banks to do those forex exchange. So we are a very tiny trader. Forex market versus other markets. So I'm not sure how many of you do have been able to do the share trading or future trading. But if you see this diagram here, you can see New York Stock Exchange, the turnover, the volume. It's not turnover. It's a volume. It's about like 28 billion. Okay, if New York Stock Exchange, the turnover, the volume, and then you can see the equity market, even high, 191 billion. And the futures market, you can see 427.4 billion. But if you can see, comparing to the forex market, about 5.3 trillion. So the volume means more volume means more liquidity. Do you guys agree? So liquidity means like the more if you like say for example, if you buy a share, if the share price is dropping quite a lot, and you've already hold those shares for probably some time, and you want to sell it in the market. The market probably won't accept it because there's too many person. Because see the price is going down, and too many people want to sell the shares. So that is going to causing a market crash, but not in the forex market because the forex market is 24/7. And the volume representing like how many banks, how many volume, how many money traded in the forex market. So it's I won't say, I didn't say, well, I put it that way. It's a highly unlikely to be crash, unlikely to be crash than the futures market, than the stock exchange market. Right? So every country need money. You need cash. So this actually is quite. That's why we trading the forex. Okay, and the forex market it's like I said before, it's 24 hours. 24 hours. That's like 3 sessions. That's what I have been bringing here. So 3 session, normally 3 session or 4 session, because the Sydney session normally including the Tokyo session, Asian Pacific session. Okay, so Asian session ranging from 5 p.m. to 6 a.m. Eastern Time. European session starting from 2 a.m. to 11 a.m. Eastern Time. US session from 8 a.m. to 5 p.m. in Eastern Time. So there's like daylight saving adjustment, and then you can see the active zone and date zone. So normally, if the active, what I mean active zone means like normally would be referred to European session plus the US sessions. Because the Asian session, Tokyo session, and Sydney session normally very quiet, and the Euro session and US session normally very volatile. Okay, so it's a typical forex transaction during the London session. See, it's mean London session or Euro session. It's most volatile during the 12 a.m. Eastern Time to 12 p.m. Eastern Time, creating what is called active zone. Active zone. Okay, right. Okay, let's see. So you can see active zone, very active. See, very active. And date zone, you can see the volatility is quite low. But when it comes to active zone, it's really high. You can see it's really high. Volatility is really high. This is a 6-minute chart, right? So all currency have daily trading range. Daily trading range. So every day, every 12 a.m. to every 12 a.m. The next day, there will be called daily range. Daily range. They have a high. They will mark the day of the high. They mark the day of the low. Okay. That's the low of the day and the market high of the day. Okay, and right. I see. Let's see how our position is going. Seems a little quiet at the moment. The market is still picking up. Okay, and let's see if I can do right. Okay, and then okay, let's try this one. Okay, support. Okay, I think that everybody should be knowing if you do this quite long, if you have been trading quite a long time, so you should have been. Okay, why often? Okay, think of the market as a game. Okay, one of the greatest discovery made in trading is how bulls and bears move in the market. So you can see here, bull means bulls. Wants markets to move up. Okay, they want markets to move up. High over high, high low. Here, high highs, high lows. Oppositely, bears, this bear wants the market to move down as low as possible. You can see low, high, low, low. Okay, so this is called a bull and it's called a bear. And then the trend. This is called uptrend. Uptrend. See, trend is going up, and this is called downtrend. Trend is going down. So this is actually typical bulls and bears. Bulls want markets to go higher and higher. The bears want markets to going down and down. Okay. Right. So as you can see here, the market is not going into a straight up, straight position. So it's not a straight trend. So it's not going to a straight line. Yeah, see, going high and then retrace, going high again, then retrace, going high again, retrace, high, and likewise the downtrend going down, then retrace a little bit, and down again, and retrace a little bit, and down. Okay, so this is called like an uptrend swing. So if you establish one boundary, so if you ready means bull, it normally have to be retraced. They have to retrace up to some time. So have to retrace and then going up again. The extension, what we call extension. So ready, retrace, and then extend. Okay. Similarly, this is quite example, classic uptrend swing. So going high and then retrace, lower support and going high again to higher resistance. Okay, and then I think it's just a moment. I'm going to show you guys this one. Similarly, the downtrend is similar. You can see AB is a boundary going down, up market going down and retrace to C and going extend to B and to D. Okay, and this is actually a similar trend. So going down, retrace a little bit and down again. Okay, down again. Okay, right. So I'm going to show you guys some news. Okay. Right. Alright, so you can see this is called like a Forex calendar. Calendar means the news. The news is going to affect the Forex market quite significantly. Can be quite significantly. You can see here next week, so not next week, next day and tomorrow, 28th, you can see there's like a high impact. Whatever it says high, it means high impact. High impact means the market assume this news comes out is going to be affect the relevant currency of that country's news quite significantly. Okay, quite significantly. You can take, for example, consumer confidence in US is market high. The consumer confidence released by Conference Board capture the level of confidence that individuals have in economic activity. And high level of consumer confidence stimulates economic expansion, while a low level drives to economic downturn. Generally, a high reading is also positive for the US dollar. You can see high reading is positive for US dollar, and a low reading is a negative. Because of a restriction from Conference Board, our economic calendar does not provide indicators. So this is just like a disclaimer. I think this is just disclaimer. So this is just for example. Just for example. So normally, if the reading comes out like it's quite high, means like it could be like it's a bullish for the US dollar. If the reading is going to be low, and this is going to causing the bearish on the US dollar. Okay, so you can see these countries are flat. So let's pick up another country. See if I can pick up maybe Germany. Germany means like normally they using euro, so it normally will affect the Europe here. Okay, let's see if I can pick up something. Okay, this is a US dollar again. This is quite. I'm only looking at the median or high impact event. Okay, this is a calendar capture all the economic news across the globe, not even the US, like Russia. This is I think is it Italy? Is it Italy? Oh no, sorry, this is Ireland. Ireland, sorry, not Italy. Japan, you can see the Japan logo here. In like say for example, the previous figure would be 0.9%. Tokyo CPI except fresh food, and the market consensus. So this consensus means a market estimation. So market estimate is only 0.7% increase, as opposed to last 0.9% increase in previous term. You can see this one CPI. So CPI is one of the three most important, actually the most important, one of the most important indicator or figures on calendar will be affect the country's currency. If the CPI going higher, the trend is going higher. Normally the currency of this, like I see the Japanese yen is going to be bullish. If the CPI going down, then normally the Japanese yen is going to be bearish, right? So Tokyo Consumer Price Index released by Statista is a measure of price movement obtained by comparison of retailers, something blah 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 blah. Okay, I'm gonna like read it over again. So just for example, so these are actually it's a calendar I normally like look at it every day. I mean, see, probably not every day, maybe every 2 or 3 days. But definitely I'm going to look at it in the beginning of the week. So if at the beginning of the week, they will actually highlight all the important news calendar. So let you know, like when this economic event is going to be taking place. So you're going to prepare more. You have a more preparation for the forex trading. Okay. Okay. Let's see. Okay, this market is quite not moved much. Actually not moved. Okay, so I think the market could be the market could be quiet on Tuesday. I would say normally quiet on Tuesday, Monday and Tuesday, and very active on Wednesday and Thursday, and become quiet again on Friday. Because Friday normally is a weekend. People, even trader, they will probably normally take a risk, take a rest. So they're not gonna sitting in front of the computer to watch how market is going. So they will probably take profit or take loss for the week and enjoy the rest enjoy the weekend. Okay, so that's why like I will say to like most of my students say you need to be aware like when you do the trading. So if you're doing the trading like in the quiet time, so you probably have to like maybe bear with the market, because the market might not be moving like in maybe 1 hour or 2 hours, and whether you need to sitting in front of computer to watch or you're doing something else. But when you're doing something else, you could be worried about the position you place on the market, and then you probably won't be concentrating on the things you actually doing. So it's kind of like a trade-off. You have to trade off between your own person's life, like a person's life circle. Um, See trade-off like if you want to um, put yourself 100% into trading, so you have to be active in the trading, seeking active, or you're doing like kind of like a long-term trading. So it's like it's totally different from what I'm actually doing, showing you here. If we do the long term, I'm gonna do like a lot of trends, and I'm gonna do a lot of technical analysis. But in the short-term trading, I think maybe the word gamble is not true, but yeah, could be using a gamble. I wouldn't say this is a gamble, but it's kind of like it's like a probability. It's a probability. Well, you have bidding on a probability auction. I would say probability auction. um, So yeah, as you can see, the market is not moving. So I'm not gonna sit here just wait for the market. And okay, so do you have any questions? Maybe if there's no question, probably I'm gonna call off the day, and I'm going to do the similar things tomorrow. And welcome you guys join me in here. And tomorrow I probably will show you some like long-term trading, technical analysis, plus the London daybreak strategy. And if you don't have any question, I'm going to call off the day, and then we see you tomorrow. Thank you very much. See you next time. Bye bye.